following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Option Block. Today, this is Mike Tusaw subbing for a vacationing Mark Longo, and we are excited to be here, and a little bit more excited to be here and actually talking now that the markets are done for the day, because it wasn't too exciting in the marketplace today. With that, just kind of going across the board here, I'm just looking at the SPX on the day here, looking at the close. I think we're down about a half point on the SPX going into the right as the market's closing. So hopefully people drank a lot of coffee today to stay awake during the marketplace. But nonetheless, there's always plenty to talk about on the Option Block. There's a lot going on. And with that, allow me to start welcoming my partners in crime, so to speak. First off, beaming in from the great state of New Hampshire, or should I say Maine, we have the rock lobster himself, Mr. Andrew Giovinazzi. Andrew, how are you today?
Did you say the great state of New Hampshire?
I corrected myself, just making sure you're listening.
There's no lobsters in New Hampshire. I'm good, Mike. I'm good.
That is good. That is good. Really? How are there no lobsters in New Hampshire?
There aren't any Well, I guess there's Portsmouth. They might pull a couple out of the water, but I don't know if New Hampshire's known for their lobstering.
Well, isn't there a state motto, live free or die, something like that?
Definitely something like that. So it's a lovely state, though. I like to drive through it, and they have duty-free alcohol or tax-free alcohol when you drive through in the state. So it's other than that, I don't go to New Hampshire much.
Okay, good to know. And for our listeners out there, if you want to have duty-free alcohol, head to New Hampshire. You never know what you're going to learn on the Option Block. And with that,
I'm pretty sure there's no taxes. I can't remember. I know it's cheaper. I don't know. Who cares? Just ignore that.
Well, maybe, I think that goes to prove that the alcohol does run rampant in New Hampshire, because he doesn't remember, for crying out loud.
I don't remember a darn thing that happens.
So there you have it, folks, the New Hampshire Alcohol Report. And moving onward, our next partner in crime, beaming in from the city of Chicago, we have from Options Express, Mr. Alex Jacobson. Alex, how are you today, sir?
Hey, guys. I'm good. I'm glad to hear everybody's good. Glad to hear that Andrew is keeping the New Hampshire alcohol industry lubricated. I think that's an admirable pastime. Real quiet day today. As you mentioned, Mike, not a lot of movement. The Nikkei was up big coming into the day. Apple was up early in the day with the development conference. and Apple traded a $13 range today, but it's going to end lower. So
I saw that.
Yeah, quiet day today. And, you know, the bounce, we always talk about this, the bounce at the end of the day. And I attribute a lot of that to Europe while it's still open. Europe clearly has got a lot going on with the flooding. So I don't know if we just didn't see any Europe coming in today to pull us up in that last hour. Hopefully what they're going through ends quickly, but a quiet day today.
Absolutely. Now, Andrew, what are you guys seeing in the VIX over there? I saw the VIX is up 30. Let's see. I'm trying to think of the politically correct way to say this because you guys have a different view on it than Longo does. The VIX cash was up 31 cents today. Any thoughts on that?
Yeah, we talked about it today. I mean, we had kind of a crash on Friday, from Thursday to Friday, basically, in it. And it looks kind of fair right now. I don't see the volatility coming in a whole lot more, maybe a little bit. But, the market now today was the first quiet day we've had in about a week and a half. So let's see really if implied volatility can come in. But today the VIX being up a little was just the weekend effect. This morning they kind of sold volatility off, but the market sort of was down small. And then the volatility kind of held firm all day. And as I look at it here at the end of the day, I thought there was some interesting stuff to do. But, there was a little pop, just the weekend coming back, I think. But nobody's, put it this way, nobody came in really and sold the volatility hard from Friday's levels. And I think that's the biggest takeaway is that you might think the market, we could be slowing down. The non-farm payrolls have come out. So whatever's going on with the yen in Japan and Europe is probably the only thing that's keeping the implied vol up right now. But, this high 14 range is kind of fairish. So what do we close? 1530 on the VIX or something, 1540. It's feeling kind of fair. So very ho-hummy.
Got it. Now, a lot of times, like in your guys' trading careers, from your years on the floor and years just in the business in general, a lot of times, like if we'll have a bad news announcement and then we stay flat for a while with higher volatility, some people view that as kind of an opportunity to maybe sell some premium in one way, shape, or form. Obviously, with what happened on Friday with the non-farm payrolls, I'd seen the term it was a Goldilocks number, meaning it was not too cold, not too warm, so to speak. It was just right for the market to do what it wanted to do. And lo and behold, we had a lot of movement to the upside in the marketplace on Friday. What typically are some areas with which, from a generally speaking, I'm not asking for specific recommendations, but generally speaking, what are areas of opportunity after you have a run-up like this? Is it something to where you guys like to both look to maybe sell the good news maybe, or to maybe do some type of a neutral strategy? Or what are some things that traders can look for after an announcement like this a lot of times?
Well, I mean, as soon as the announcement came out, I mean, we were selling, let's say we had some long VXX put spreads going into the announcement that we closed when the vol started coming in. And I think to some degree you could sell, buy puts in the VXX or the VIX through the announcement, because usually you have a continual takedown of vol. So I prefer let's just say I would prefer the short Vega trade, just using the vol products, over, selling premium in the cash indexes instead, because I'm not super interested in the gamma part, because the market tends to, when we rally, we tend to rally really hard, and it's hard to sell almost any kind of option into that and make money on a vol decline. So in those cases, I mean, I prefer to separate the vol trades from the actual underlying cash trades.
Now let's expand on that a little bit. Back in the old days, before the VIX products, in a situation like that, like how would you translate that into doing something like that onto the SPX? Just so our listeners can kind of maybe learn a little bit the benefit of how good you have it in this day and age to have VIX products or something along those lines, if that's what you're looking to do.
Well, what you try to position then in the SPX wanted to be short skew.
Got it.
Which means you basically wanted to make sure you owned some calls that were relatively at the money, and you were short a whole bunch of, downside puts against it. And if the vol collapsed on the downside and you had a little gamma from your upside, you're essentially, you could have like a long gamma short vega position. And if you launched far enough up, the position would collapse. So that's how I used to trade the SPX. I mean, we didn't have these kind of moves, but that's how I would trade when I was expecting, let's say, the skew to come in a little bit. That's how I would trade that position. It was in the mid 90s. We didn't have those 1-2% just like rocket ship up days. I mean, there was a bull market, but you're like, woo, it's up 4 handles, and everybody's, doing backflips and stuff like that. So it's a different type of, we get kind of a different sort of lift these days.
Yeah, most definitely. No, most definitely. Now, Alex, what are some things that maybe you guys are looking at? I don't want to steal too much thunder from the Xpress Block, but from a generally speaking, after we have a ginormous up day like we had on Friday, what are some opportunities with which that people could look for from a strategy standpoint on the broad market a lot of times?
Well, vol is still, in my view, more towards the high end of the range that I would expect it to trade in here. I don't think all the vol came out on Friday, and I'm, commonly a big contrarian on vol, but I would take Andrew's points to heart. I think if you're going to trade vol, first of all, find a product that you're comfortable with, whether it's the SPX or the Spider, and then look at some type of spread or combination trade. And it could be as simple as, buy a few hundred Spiders and sell the skew in Spider calls, sell it delta neutral, and if you're an active trader, adjust it. I mean, that's a pure vol trade. To both your points, that's something you couldn't have done years ago before you could actually trade the cash. You had to simulate the cash with an in the money or something like that. But if you clearly are a sophisticated trader and you've got good vol tools, and if you don't have good vol tools, obviously come to the OX site where we have great vol tools. In fact, we put vol graphing up. Real-time vol graphing is now going up on the site. We're going to bring one of the development guys on. But, I'd look for ways to sell it in products I am comfortable with. And comfortable with means I can sleep nights. So, might mean buying some Spiders and delta hedging against it. Customers like the Russell a lot. They like the IWM a lot. And maybe trying to find some sweet spots in vol against the IWM. Ironically, customers don't seem as comfortable in the Qs. I'm not sure why that is, but the big appetite tends to be in the Spiders and the Russell. But I'd also look at vol, across the board. You can come to Idea Hub and you can see market neutral ideas in the indexes, in the ETFs. You can also see it in the big equity names, Apple, Amazon, Google. And you're going to see stuff. The thing is, you got to find a comfort level. I mean, there are people who will sell SPX credit spreads all day long because they're cash settled and they're European, who will never sell an Apple spread. And there are people who will look at Apple on a day like today with not a lot of total change, but a $13 range and say, man, the VIG in the options is, enormous. I'm going to try to take some of that out. And I'll either do it, as Andrew pointed out, either in some kind of ratio or some kind of simple credit spread. I mean, how do you capitalize on it? It's a question I used to get a lot. And people would say, do you prefer this, doing the 1x2 or doing the delta neutral versus the cash product? And I look at them and I go, what do you do during the day? And they say, well, I work. I'm a chemist at Bristol Myers, and you say, okay, so your trade's got to be simpler. Your trade's got to be something that can be autopiloted to a certain degree. And you'd run into other people who say, look, I trade all day long. I got 6 screens. I've got a backup generator. I've got extra air conditioning, and I'm in my trading room all day long. You say, okay, well, that's different. Okay, if you're going to monitor it all day, then let's look at things like trading some calls against some puts, trying to find the sweet spot of the skew curve, which, oftentimes is going to be there for a few minutes, oftentimes is going to be there for a half hour, and oftentimes is systemic, especially in the, out of the money SPXs, and there's just systemic skew. That's a post 87 event. So try to find something that you're comfortable with. I know this kind of sounds like a vague answer, but you got to find something you're comfortable with, you can sleep nights with, or if you're going to be out of it at the end of the day, something that's liquid enough that at the end of the day you can get out without paying up to get out.
I think that's a good point, especially where you mentioned how do you trade all day, or are you a chemist and you're not able to be trading all day? I experienced that a couple of weeks ago personally. Now, this is part of a much bigger picture in terms of like the position that I'm trading, but for sake of simplicity, I'm doing these calendar diagonal put spreads on Russell, RUT. And with that, I'm like, man, I wasn't getting the vol I need. And this was probably about a month and a half ago. I just was not getting the vol I needed to continue with a certain role that I wanted to do on it. But because of the fact that I trade all day and I'm staring at these things constantly, all of a sudden someone was buying some at the money calls with what I was doing, and and it only lasted for a few minutes. I was able to create a calendar spread, and I'm guessing this was because I did not see this earlier in the day, but this window of opportunity was only there for a few minutes, like you mentioned, and I was able to sell some calls and then recreate the same type of Greek position that I wanted to create. I was just using a different strategy than what I was originally intending on doing, but I could not have done that with the strategy that I was set because someone on the other side of the trade had bought a bunch of calls, and that's what allowed me to capture that one opportunity during the day. And I think that's a great point with which you make, and that you're not going to find that very often. And just the fact that I did happen to find that, I wouldn't have found that if I were not trading all day. And I think that's a very important point to make. Are you able to actually take advantage of those types of skew opportunities, or whatever you want to call them, during the day? And if you work during the day, then no, you're not going to be able to. So with that, you need to adjust your trading in which you're using ways with which it's realistic to your lifestyle, like the Options Express advanced orders. I think they're phenomenal. I spent many years working them and using them with how they're worked, and you just need to cater things around how you're set to do things.
Yeah, but I think to your point and to Andrew's point, I think a lot of times when you look at your brokerage relationship, when you look at the tools, a lot of people look at price. And I do a hub webinar, and I show the walk limit product. And the walk limit product is a product that we have, and I don't want to just turn this into a Valentine for Options Express, but the person upstairs who writes the checks for the show would prefer that. But the cool thing about walk limit is you can enter up to a 4-legged spread, enter the limits you want it to work at. Let's say it's a spread trading for $1 credit, right? The walk limit product, you can say, look, try to sell it at $1.10, leave it out there for a little bit, bump it down to $1.08. Everybody looks at what they pay their broker, and people will say, well, this firm is more expensive, this firm is cheaper. The thing about the walk limit is it lets you manage time. If you've got 4 or 5 spreads working and you've got a powerful tool that does the cancel and replace for you, you don't have to keep coming back. You don't have to lose track. Andrew last week talked a little bit about trying to get out of stuff near the end of the day and the challenge with getting out of stuff near the end of the day. And, that's a challenge for everyone. And time management may be more important than the actual, money you pay your brokerage house. Because if you've got a time management issue, you work during the day, you got to have great tools to manage your trading. And if you have great tools, more strategies you can look at. We've all heard that complaint. I couldn't get in at the opening. I couldn't get out at the close. And we as professionals have had that happen to us, and we kind of shake our heads and we say, well, the guy on the other side of the trade. And so there is a big lifestyle component in trading, and people have to find that for themselves.
Yeah, it's true. And the other thing, if you're viewing your trading as a business, whether it's a part-time business because you also have a job, or you're trying to be a full-time trader, whatever the case may be, then a key component to any business is time management. And with time management, why should trading be immune to it? So I think that's a very good point. And with that point, that will conclude the trading block for today. And let's move into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
And welcome to the odd block. This is where we like to don our fedoras and listen to Andrew out in the great state of Vermont get odd.
This is Andrew from the great state of Vermont, where we're famous for Stowe and Bernie Sanders and Ben and Jerry's ice cream.
I'm learning so much about geography today. I'm just going to keep doing this the rest of the show.
Full of useless knowledge I am.
How big of a place do you have out there?
It expands through 3 states.
Yeah.
You can basically just jump through 3 states here. I mean, it's not like, I grew up in California. You can drive for days and be in the same state. Here, 5 seconds, you change your mind, you're in a new state.
It's like
but anyway.
4 corners in Colorado, right? The 4 corners where Colorado and Arizona and I'm going to be tested now.
Yeah, but those are still relatively big states.
Yeah, but they all come together at one point, right?
Yeah. I know what the 4 corners is, Alex. Okay, I know you're the viceroy. I know you're the master strategy technician there, but even I can figure out the 4 corners.
Well, I went to college in Joplin, Missouri, another bit of useless trivia for us. And we actually there's a local TV show there called Good Morning 4 States. It was called the 4-state area because it wasn't quite 4 corners, but it was very close with Kansas, Missouri, Arkansas, and Oklahoma. Another bit of useless geographical knowledge for you to chew on. Getting back to the odd block.
I was about to say, with Longo gone, we've totally torpedoed his show. Let's get to the odd block. Okay, a couple interesting things. Actually, the trade that was most interesting to me, we'll just start off with, was in GOL. Linhas Aereas Inteligent, blah, blah, blah. It's a Brazilian airline, basically. I cannot pronounce the Portuguese. But GOL is the symbol.
Gold! Sorry.
Gold! The name was down 23 cents to $3.71, basically making a 52-week low. And Brazil's kind of been in the news lately. Maybe the Cardozo revolution kind of stalling here as they surprisingly do the big government spending thing and try to fix everything that way, which of course we know just generally does not work. But that's a side note. But from a contract point of view, paper bought 10,000 GOL Jan 2014 4-level calls for 80 cents. That's a pretty big purchase. At the money calls, again, Alex would have told them to just go buy the stock. But a lot of leverage here for little dollars. I mean, I think you have a very high gamma and potentially very high delta. So I think you could get a lot of bang for your buck in this case. I think maybe the Brazil is getting a little oversold. So I don't think it's a bad trade, but somebody basically doing some bottom fishing in this. The open interest on the contract was only 104 before the end of the day. So, if they're putting on a synthetic put or something like that, they're going to an awful lot of trouble. That's all I have to say. So it's feeling like kind of a bullish scoop in the bottom type buy in that Brazilian airline. The next trade looking interesting, where, some trades happen in the morning and it might not quite be all right. Well, in PF, Pinnacle Foods, this, again, it's not in the same business Smithfield Foods is, but they're more packaged foods, Bird's Eye, Duncan Hines, and goodies like that, all those famous names. But, it could have been potentially a takeover target. But the June 25 puts traded around a little more than 500 contracts. And to me, it looked like some long put holders possibly protecting stock position and bailing on them in the morning. By the end of the day, the puts they sold for between 80 and 90 cents are trading 50 cents. So it's definitely a good trade after earnings. Not very much volume, only 230 contracts normally. So for whatever reason, there was some decent paper in this thing today, and it looked like from the open interest, because there was around 700 contracts, that those long put holders, possibly against stock, I would say. Then I couldn't see that, but it has the feeling of, people dumping some puts out.
Dump those puts.
That's what. Now here's another interesting one. Again, a kind of curious volume. The Celldex Therapeutics, CLDX, was up 68 cents today to 15 and a quarter. Stock's making a 52-week high. And early on this morning, I think Celldex was trading a little higher, probably closer to $16. A pretty good chunk of volume came in and sold the June 15 and 14 puts. The 15 puts for 40 cents, 2,000 times, and the June 14 puts for 17 cents, 3,000 times. Both one either hitting the bid or very close to the bid. And the open interest on this was literally nil, 883. It was less than just barely a little over 200 contracts for both strikes. So it's a pretty aggressive opening sale on the 15s and 14s, I think, with the stock making a new high. Now, I didn't really look for the news on it, but the trade by its nature is pretty aggressive, selling the 15 puts and the 14 puts in that kind of size in a relatively thin issue. By the end of the day, both those puts were trading higher than where the customer sold them. So again, that's a put sale, not working out very well. So they're waiting, I guess, for some news, or the news was positive, but a very aggressive sale, at least what I can see.
Got it.
By the end of the day, implied volatility was up 19 points, though. So I think even without the stock moving, the puts were going to be a loser with the vol up that much. So I think there's definitely something. There's more happening in here, so it might be worth people digging in a little more. As Mark would say, go and play the home game. Go to the Option Insider website, to the Option Block, and see this unusual activity. And we got one more. Again, an interesting trade in Southern Copper. The stock's only down a penny to 31.31. It's not doing much. It's in the middle of its range, and considering for all the commodity companies, it's probably not bad. Again, a pretty good-sized put spread. So the customer closed some June 32 puts, 6,000 times, and bought the August 30 puts. The trade was about a 15-cent debit. Now, they bought less puts this time than they did before. There are 6,000 contracts open in June and almost none in August, so this is all pretty new paper, at least on the August side. And again, this just looks like a roll. I think somebody wants to hold the long position, and they're using puts to hedge their long stock. And it looks like with the stock going up a little bit, they're not buying as many puts as they were before. And there's a pretty good little pop in volatility in August for this. Not huge, but enough. So again, it's kind of a standard. Somebody wants to hold the equity position, and they keep their puts. And this miner does operate mostly south of the border. So again, it looks like a potential play on copper, in Mexico and Peru, but just a pretty good old, just rolling positions. Not super exciting, but pretty good chunk of paper for a stock that trades only 2,300 contracts a day. That was it. Not much going on today, really.
Sounds good. And that concludes the Maryland version of the Odd Block. And now we move to the Xpress Block.
The Xpress Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Xpress Block. We are at the point in the show where our fedoras have already been donned, and now we get to hear the wisest words of the Viceroy. So, beaming in from the beautiful city of Chicago, Illinois, from the world headquarters of Options Express, we welcome, as always, Alex Jacobson. Alex, what do you have for us today, sir?
Thanks, Mike. I guess, as we said, not a lot of news today. We came in this morning, so the Nikkei up big, and I thought maybe that would have given us some trade lift. Everybody was watching the developers conference at Apple today, and the market turned that into a disappointment. As we said, Apple traded a $13 range today, but actually ended the day down. The only other big piece of news today, back to my sort of constant going back to macro issues, is, and this I guess was a bit of a sleeper, but S&P changed the outlook on the U.S. debt to stable from negative, citing better economy, and there was a lot of good news today that could have been spun into a better day, especially Nikkei, which I think has been troubling a lot of folks lately. The Nikkei is moving 4, 5, 6, 7% a day. That's a 90 vol. But other than that, today, I guess we're all starting to sound like a broken record, but it was quiet today. Waiting for Lulu's earnings, which are due out after the close. So by the time we air this tomorrow, Lulu will be out. They had already warned that they would disappoint. But other than that, quiet day all around.
Got it. Now, it's kind of interesting you mentioned the news about the U.S. debt. I did not hear that myself, but do you think that's going to – because I'm just looking at the various bond ETFs today, not a lot of movement. I'm looking at IEI down 26 cents. Do you think that's going to have an impact on the yields on the 10-year?
Yeah, I think the yield on the 10-year, I don't think the rating has been a factor at all, except that the market puked when they changed the rating. I think the full faith and credit of the United States is still a pretty good bet. And I went to business school a long, long time ago. By definition, the full faith and credit of the U.S. was AAA. That was the benchmark. So I think, will a little improvement help? If we get AAA back, will it change rates? I don't think so. I don't think anybody has perceived our debt as being unattractive from a rating standpoint, but a lot of volatility in the debt markets. The kind of moves we see today were the kind of moves you'd see in the course of a year. I mean, the German 10-year moved over 3% today. The UK 10-year moved over 3% today. Those, you take a month to get it to move 3%, or sometimes you would move 3% in a year. I don't think it's going to affect the rate much. I think the rate's still going to run up a little bit, indicating a healthier economy. I hope it doesn't run up a lot, because I think there's a line you cross when you've gone from healthier economy to an expectation of inflation and the Fed we talk about every week. I think some of that issue with the Fed going away has been tempered here a bit. But no, it's nice to see that Standard & Poor's finally likes us a little better than they have in the past.
That's a good thing. It's always good to be liked. And that will conclude our Express Block today. And let's move into Around the Block.
Around the Block.
All right, and welcome to Around the Block. This is when we talk about how we're going to try to stay awake the next day, if indeed the market stays in the same areas with which it has been thus far. And Alex, what are you guys looking at over at Options Express coming up in the coming week or the coming days?
Looking at Europe, looking at this horrible flooding that's going on and the economic impact it will have. Europe has enough trouble. There was not related to flooding, but there was a failed Greek attempt today to sell their nationalized gas company, which I think is disappointing a lot of people. Greek had begun to look better. Looking at Europe, obviously looking at the Nikkei every day, these 4%, 5%, 6% moves, and looking at the 10-year up over the 2.2. Think it could go to 225, 230. A lot more than that, and I start to get a little nervous.
Got it. Andrew, what are you guys watching out there in Massachusetts?
You mean in Connecticut? In Connecticut?
Oh, yeah.
Not too much different from what Alex is looking at. I think one thing is surprising is, there's a pretty low level of VIX future premium right now in the market. So there's not a lot of that extra bid for protection, essentially, at least for VIX futures. So, while they're the kind of these, I think there might be some peripheral potential problems. Like, I think Europe's always just going to be, it's going to take Europe a few years to just get out of its way. I don't think there's any way around it. But I'm watching mostly just seeing if, I think it's a good time for maybe positions with a little decay, positive decay. This is coming from a juice buyer guy, but I just keeping an eye on what the vol market really wants to pay for protection. And right now they're not paying a whole lot more, from like basically paying over parity for futures. It's just, there isn't that huge bid for them. So it looks kind of quiet here as we go into, earnings season starts, in about 5 weeks. I'm already talking about that with 5 weeks to go. But, unless we start getting some different headline news, I think any talk on the deficit, which probably has been killed by S&P upgrading the U.S., unfortunately, I wish they would have waited a little longer. I think that's the kind of stuff that sort of propels us higher. As we write our own ship, Europe's writing their ship, the Japanese are trying to figure out a way to do theirs. So I just think we're in for, it feels like a little slower time, but haven't seen the sellers of volatility yet. I mean, we saw it last week from a high level to kind of a mid level, but nobody's come in and started to sell it out yet. And I think you see like numbers like the VIX drop, like one full handle, or you get that kind of movement. I think you could start actually seeing some a little bit more of a run because people are getting, again, more confident, starting to buy stocks, selling the volatility. So that's what I'm looking for.
Sounds good. And what do we have? What do we have coming up in the option pit with which our viewers can enjoy, or our listeners can enjoy at some point?
Our listeners, Mark is at meetings this week out of state doing top secret stuff. But at the end of the month,
top secret, huh? Wow.
Top secret. Can't discuss it. But Option Pit will be launching a what we call our boot camp, not to be confused with the Option Insiders Option Boot Camp, but ours will be like a 4-day course that's sort of a slimmed down version of our gold course for people that want to understand how volatility affects option pricing. But we focus on, simpler, basically spreads and collars and risk reversals and things like that. I'm trying to just keep the focus pretty narrow. And we will also be launching a service in July. You'll have to wait for that update, but we've had a lot of requests for it, and it is hopefully will finally be coming on a line in July. So stay tuned for the news on that. But look for optionpit.com/events, and you will see our option course or our Option Pit boot camp coming soon, 24th to the 27th, I believe, of June.
Sounds good. Sounds good. And Alex, what do we have to look forward to from the boys and girls over at Options Express?
Yes, we are a gender-friendly firm.
Don't want to get Nina mad at me.
Yeah, neither do I. This week, tomorrow, 7 p.m. Central, I'm going to do a hub webinar. And as I mentioned, I'll showcase the walk limit as well. Wednesday, 1 p.m., webinar on the platform, doing a site tour. I've touched on a number of the new features, new charting, new volatility charting, new trading patterns. That's really a cool tool. You can see what other people who are trading the name you have an interest in are trading in both the cash market and the options market. So a lot of new tools, always updating the platform. Also, Wednesday after the close, I'm going to do another hub. So I'm doing one in the evening on Tuesday, doing one after the close on Wednesday. You can come to the site, optionsexpress.com. Don't need to be a customer. Don't need to have an account. You can get to all the education events for free. So, and there's, as we say in the airline industry, a full pattern, a target-rich environment of stuff you can come hear about. A lot of new upgrades to the platform. That's what's coming up in the next few days.
Sounds good. Sounds good. And that will conclude today's episode of the Option Block. Join us later this week when we get Mr. Longo back to the hot seat. And we are excited for another episode. Thank you for listening, folks, and let's have a successful trading day tomorrow. So long, everybody.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.